Good afternoon, everyone. Good morning in some places and good evening in some places. We are glad you can join us this afternoon. So welcome to our webinar today, Saturday, August 21st, 2021, Financial Accountability and Management Part 2. For those of you that were with us in July, we did the Part 1 of this program, and today is the Part 2. Again, we're glad you can join us. This is Parenting Resources and Initiatives, and our agenda for today, we're going to run through the introduction of our speakers, and then they're going to have their presentations. In the course of their presentations, they might engage with you. We actually encourage active participation and engagement, from the audience. And then we'll have a open Q&A. You are welcome to contribute, to ask questions or just comment. And then we'll have the closing notes and announcements. So right now I'm going to get started and talk about who we are. So PRI, we're a faith-based non-denominational organization, and we are committed to helping parents fulfill their God-given role of raising well-rounded children. Our vision is to enable families that thrive, and this is through excellent parent-child communication by providing a conducive environment for the child. We understand that a child's potentials can only be maximized when the environment is conducive. And of course, when the child thrives, the family thrives as well. So that is our core vision. We also encourage, support, and provide resources for parents to raise children who will be spiritually, physically, mentally, and emotionally sound, just all-round soundness. That is our mission. And in pursuing these goals, this vision and mission, we explore all kinds of avenues to help parents to stand alongside parents as well as the children themselves. We provide resources within the community. We provide online resources. We have webinars like this, and we also have in-person meetings. We also facilitate youth programs and youth retreats and family retreats for churches and other organizations. So again, you are welcome this afternoon, and we are trusting that it will be an engaging and impactful time for us as well as for you. I'm going to start by introducing our speakers. Of course, I don't need to introduce myself. My name is Bola Odetoko, and I'm the CEO and founder of Parenting Resources. Our first speaker for today is Erin Olalude. Erin Olalude is a Nigerian immigrant and a financial advisor with Northwestern Mutual in Atlanta, Georgia. He graduated from the University of Georgia, where he also played football. He's originally from Ibadan, Nigeria, and he received academic and athletic scholarships to migrate to the US at the age of 17. Coming from a humble background, having financial stability and security has always motivated him. He currently works with diverse group of people, including professionals, business owners, and immigrant families, by educating them about the financial system in the United States and helping them to build solid financial plans that can help them achieve their financial goals, help them to retire comfortably, and also build generational wealth. He's passionate about impacting lives through their finances, while building long-lasting, genuine relationships with them. Aaron, you're welcome. Our next speaker is Babatunde Balogun. Tunde is the financial analyst with several years of experience in the telecommunications and education industry. He's a Cisco certified network associate, certified SQL programmer, AWS certified cloud practitioner, and a certified Six Sigma Green Belt. He has a very strong passion for data mining and financial markets, and he's the principal at Twine Trading LLC, and has been actively involved in the equities market through Securities for over 12 years. He has a bachelor's in engineering, a master's in analytics, as well as an MBA in operations management, with significant experience in developing strategies to improve competitive advantages in organizations. He is deeply rooted in his Christian faith, and this is the driving force behind everything he does. He's also an avid swimmer and martial artist, and is currently a black belt holder in Hapkido. Last but not the least is Ololade Otayemi. Ololade is Six Sigma certified yellow belt professional with leadership experience in both public and private sector organizations. He holds an MBA in Certified Leadership and Scrum Master accredited certification, both from the International MBA Institute, Zurich, Switzerland. He also holds a computer science certificate from Stanford University School of Engineering. Ololade has trained teams across the world, so to say, the US Embassy, Department of State, United Nations, Emory, and all of that. And he has also, in addition to training, he himself has also attended various executive trainings, and you can see the names on the screen. He's a startup advisor, and that is his main focus on this program today. He's a startup advisor. He's going to be talking about startups, getting into the emerging markets and all of that. So that is why you see all of this information there. I'm not going to read all of them because we don't want to take too much time. But if you need more information, you can check his website, ololade.com.ng. He currently leads technology and international business at the new Black Wall Street project here in Stonecrest, Georgia. It's a business village that's designed to increase the number of successful Black-owned businesses in the US. He's happily married to an angel, Ngozi, and they both have 2 gorgeous kids, Daphne and Ethan. So please give a virtual round of applause to all of our speakers. And now we're going to start with Aaron. And like I said, feel free to engage with participants, and participants, please feel free to put your questions or comments there as well. We will read through. Our team would, check in, constantly, and whether you have questions or comments or concerns, please put them there. And I would like to put a disclosure out here. We know this is has to do with our finances and all that, and we would like to say that while we strongly recognize and support and appreciate the wealth of experience that each speaker is bringing to the table today, this is in no way an endorsement of anything or anyone or any product. We are encouraging you to take the information you would get today and please do your due diligence. Go and do your research. Don't take our word for it. The idea is to stimulate our thoughts, to bring information to the table, to encourage discussion, and of course, to challenge us to do better than we have been doing before. We know a lot of us are professionals and, well-grounded people in our various areas, but there's always room for more. So we encourage you to take the information from today and do your due diligence and make a decision. Of course, afterwards, we will share the information if you would like to reach out to them to clarify something. But again, this is not an endorsement of any product or any person or any company. Thank you, and we hope you get a lot of information from here. So I'm going to turn it over to Erin. Please go ahead, Erin, and take it on.
Good morning, everybody. Thank you so much for that introduction, Mr. Detoko. And I'm so thankful and grateful for this opportunity to be on this platform this afternoon. First of all, one of the things I like to tell people first when I meet with people, a group of people, is a little bit about myself, because I like people to understand my why. And so I got into the financial industry just because I wanted to solve 2 questions. I want to have answers to 2 questions, which bothers me a lot. And those 2 questions are, the first one is, I don't want my kids to say the same thing that I'm saying right now about my parents, which is, oh, I wish my parents were wealthy. I wish my parents had financial literacy. I wish my parents understand how to manage money or how to use money to make money for themselves. And the second one is, I don't want to be a financial burden on my kids the way my parents are on me right now. I love my parents so much, but I'm responsible for a lot of stuff. But the main thing is, they did the best that they could. They made use of the knowledge and resources that they had when they had their time, when they were much younger. But what I like to tell a lot of people is, this is 2021. There's a lot of information and resources out there that can help everybody to achieve whatever financial goal that you have for yourself. And this is one of the great ones. Having 3 speakers, when I saw you read about those 2 other speakers, the experience that they have, there's so much knowledge each and every one of us can get from this and be able to implement that into our lives. So I'll share my screen and I want to show something real. So this is one of the things that drives my passion and motivation for this job. So if you look at this graph right here, it's showing the wealth gap in America. So the first graph, the bar chart is the Caucasians, right? And the blacks, we all were at the bottom. So the blacks involves African Americans, we Africans, immigrants. And then the other right here is showing the Asian community. It's the vast majority of them. And this, what it shows is just to kind of have a clear understanding of this is the time where we need to do a lot more than we've been doing in the past. I know a lot of us on this call are probably already have a lot of things in place that we're doing, which is great. But what this helps to kind of understand is the fact that we have to do more than just for ourselves. You can't close this gap unless we create a generational wealth. We can't close this gap unless we're leaving something behind for not just our kids or even for our grandkids. The Caucasians, they built the system, right? And they know how to use the system to their own advantage. The great thing for us is the fact that the knowledge is out there right now, for each and every one to take that knowledge and use it. So while I go from there, all right. So I understand a lot of people have started a lot of stuff, but I feel like when it comes to financial planning, there's still the basics that everybody needs to do. And this is one of the things that I would like to share first. And I feel like this will help when the other two speakers get on the call as well when they make their presentation. Financial basics is just the same for everybody, regardless of where you started from or where you are right now. And even when you get started and you're already way ahead of others, it's very important to probably like go back and just double check and make sure we're still doing the right thing. So to have a financial plan, one of the biggest questions you should be able to ask yourself and even your family is, what future do you want for yourself? What's the goal for this? What do we want to see our family? What are we trying to achieve and accomplish? So when we have a clear answer for that, then you can actually sit down and answer more questions that can guide you and direct you in the right place. Because what financial planning does is give you a roadmap to the future that you want for yourself. I'm sure a lot of us have been on different journeys where you have to use Google Maps or Waze, or even before you left your house, you have to plan a journey. Okay, we're gonna travel to New York in 6 months. We put a plan in place to get to there. It's the same thing with financial planning. You just don't wake up and be like, oh, we're wealthy, we have a lot of money, we have a lot of investments. It takes a process and a plan to get there. And so these are the five key actions that I feel like is very important for everybody to include in their financial plan. The first one is, yeah, we're gonna spend money. We make money to spend money, which is the right thing to do. But while we're spending money, it's very important for us to understand what the cash flow looks like. So that pretty much means how much are we bringing in as an individual, as a family, and how much is going out. And to do that, what I encourage people to do is have a working budget. So when I say working budget, a lot of people make budgets and they never use it or just forget it or leave it somewhere. It's very important when you have a budget, even if it's just once a week or once a month, you always review it and check, okay, how much are we bringing in? How much are we going out? What expenses can we cut down? When you have a clear understanding and track of your cash flow, then that gives you the room to be able to do more important things. So how do we grow? And how do we save? So a lot of questions people ask is how much should I be saving? How much should I have in my savings account? So once you have a clear understanding of how much you're bringing in, you can decide how much you should be saving. And then once we're saving, that's for just a short term. Now we talk about growing. So there's a difference between saving and growing. There's a difference between saving and investing. When you save, you're just trying to have some, you're trying to protect yourself from unforeseen situations because life happens. Nobody can guarantee what's going to happen to them in a month, in 2 months, but you want to make sure we have protection and plan in place. If anything happens, we can take care of ourselves without having to borrow money from people and stuff like that. And then you jump to grow, which are the I'll take them one at a time. So the saving is, so this is just a basic starting point. A lot of us might be way past this, but if you're just trying to get started or you don't know where to start, this is a good starting point. 20% of your income is ideal to start saving with. But some people might be in a position where that might be too low for you. You can start with whatever is comfortable for you. If you start from a low point, that might be ideal. If you say 20% of your income, that gives you a lot of room to be able to achieve the financial goals and plan that you have for yourself for the future. And that 20% is just to kind of build an emergency fund for you. And ideally, we recommend that you have between 3 to 6 months of your expenses, monthly expenses, saved up. And the reason for that is if you look at the stats right here, 39% of Americans can't cover the unexpected expenses of $400 without using a credit card or borrowing money from people, and which can cost more because you have to pay the interest on the credit card that you use to pay those bills. So those are the things that limits a lot of us, especially we people of color, from achieving financial security, financial stability, and creating generational wealth. Because you get in a place where some emergency shows up, and now you have to take care of those things. It puts you on hold for you to stay on track on the goals that you want, like investing. So if you're investing already consistently, and now some emergency comes up, you have to put that investment on hold to take care of the emergency. But if you already have an emergency fund set aside for things like that, that will not stop what we're already doing on on the investing and growing side of the fund. So ideally, when you're talking about emergency fund, like I said earlier, you want to have between 3 to 6 months. So if you're starting now, you can shoot for 3 months, and then you can shoot for 6 months. So that way, okay, regardless of whatever happens, I can pay my bills, I can cover my emergency without going into debt. So I already talked about this earlier, which is tracking your expenses. So what is coming in and what is going out. It's very important to be able to do that. I've seen situations where a lot of us make money, but when you sit down at the end of the month, it's kind of like, I don't even know where all my money went. Yeah, I know I made this, but I don't even know what happened to this. But before I knew it, I didn't have anything left to save. So it's very important to be able to answer this question. Are you a spend first and then save the rest? Or you are a save first person and then spend the rest? Once you can answer that question, it gives you a lot of peace of mind to know if you have to make an adjustment. So if you know, okay, once I get paid, I'm saving first. Just like a lot of us pay our tithes. So if you know, okay, I pay my tithes and then I pay myself first by saving. And then whatever is left, we can use it to address whatever bills and expenses that we have. Or you're a person that you spend first and then you save the rest. If that is not working for you, because you end up saying, okay, I'll spend my money first, but then I have just a little to save. And if that little that you have to save is not up to about 20% of your income, you might want to adjust that. So that's what I was showing you. So to build your budget, you can actually use this formula. It's very, very easy to implement. So 60% of your income, you want to use that towards your fixed expenses. So fixed expenses, your rent, utilities, food, housing, insurance, all this kind of stuff. And then 20% that we talked earlier is about saving and investing depending on what stage of life you are. So a lot of people might be in a stage where they already have enough money for emergency. So that 20% might just go towards investing. But some people might not have enough in their emergency first. So it wouldn't make sense for you not to have enough in your emergency fund before you jump into investing. So you just gotta establish the foundation first before you actually start taking much more steps. Because I feel like for me, financial plan is like building a house. Very easy to understand. You're trying to build a house, the first thing we gotta do is do the foundation. It doesn't matter how great you want the house to look. If the foundation is not solidified, there's nothing you can build on that house that will stand. So once you establish the foundation, then we can start building whatever we want on top of that. So when it comes to investing, which is very, very important, which a lot of us don't do as much as we can, the most important thing is starting as early as possible. I tell people like you want to get started no matter what time it is. A lot of people try to like time the market. Oh, I'm gonna start investing when the market is this, when the market is that. You can never time the market. You just gotta start and stay consistent with it. This graph kind of just show like the results of investing $100 on different ages. And I don't like really I don't want people to think, oh, I wish I had started at this age and not use that as an excuse not to get started. It doesn't matter when you start. You eventually still gonna get compounding interest is like you can't beat that. But starting and staying consistent is the most important thing. When we talk about the foundation of financial plan, the other second important thing is protecting your biggest assets. And for a lot of people, your biggest asset is your income. It's your money that drives everything else. It's your money that you use. The income you make, that's how you can pay your bills. That's how you can pay your rent, pay your mortgage, take care of the kids. So when that is the biggest asset that you have, it's very, very important to make sure we have that protected. And to even get started with that, people that work with employers, you might be in a position where you have some coverage from your employee, which is called a disability income insurance. They cover a certain percentage of your income. And just for a quick of times when people get in a situation where they have a medical condition. Now you can go to work, you have medical bills to pay, and you have lesser income coming in. So when that happens, it's been very, very hard to stay on track with your financial goals. So you have half of your income coming in, and now you have medical bills that you have to pay. That's one of the things that never, like, a lot of people never get a chance to achieve this plan and future that they dreamed for themselves. So if you with an employer and they have this benefits for you, it's very important that you understand all those benefits. What long-term disability they have, what coverage, what percentage. And also if they have retirement accounts, what retirement accounts do they have, which one fits your situation, your income, your tax situation. Because it's a benefit for a reason and it's important to take advantage of it. What happens when people get jobs, they give you that big package of those benefits and nobody ever sit down to actually read and go through them. And you might be actually missing out on a lot of stuff, which is supposed to be beneficial to you for working with this company. And also, if you're a business owner, those are the things that you can actually even set up for yourself as a business owner. And then the other part of the foundation, which is important, is protecting your loved ones. I know a lot of us are making a lot of changes when it comes to that. When we have families and we have loved ones, it's very important to put protection in place, if anything should happen to us. I tell people like I don't want people to live their life on just hope. Oh, I hope this doesn't happen. If you have a solidified goal and future that you're trying to accomplish, yeah, we hope for the best, which is grow old, have my grandkids be rich and successful as I want, which is the best that we're hoping for. But at the same time, we have to be prepared for the worst. Losing someone that we care about, it's not they don't wish to die. So if things like that happen, we have to have the right protection in place, but not just for ourselves, but for our family as a whole. And we have a lot of us that a lot of people depend on us. A lot of people depend on us from our parents to our kids to our spouse, even friends, families. So if anything happens to us, we know the implication of that to others people who live behind. It's very important to understand how insurance management work, insurance planning. So life insurance, how does that benefit the family? How does that fit into the budget? How much life insurance do you need? How much do you need for your spouse and all this kind of stuff? So that it's kind of like a separate plan on itself. So when you're talking about investment planning, you have the insurance planning as well. But the goal is to make sure both of that aligns with the goal for the family or for yourself and also fits within the budget that you have for yourself. So lastly, what I would like to talk about is the fact that I'm sure a lot of us don't really understand how this kind of like the importance of having a financial advisor. People think, oh, I'm not gonna find somebody to tell me how to spend my money. But what a financial advisor does is way more than that. What they do is help you guide you in the right direction. It's just like if you go to a new city and they give you a guide to take you around that city. That's what a financial advisor does. So if you think this might be something beneficial, you can look around. You can look online. It's somebody that you know and you trust. But getting a financial advisor it makes your life really, really easy. Because I met a lot of people, they were like, yeah, we wanted to do these things like 3, 4 years ago, but we didn't know where to start. We didn't know who to talk to. So reaching out to somebody that you know and trust can be really beneficial. And at the same time, I feel like we as immigrants, we don't do a good job in sharing information with ourselves. When I showed you guys the graph of how the Caucasians are like so wealthy, and you have the others, which is the Asian community. The Asian community are so close, and when they have resources and knowledge, they share with each other, and that's how you see them grow. But we need to do a better job of okay, if you have friends, you don't have to be in the financial business to help out. Hey, I met with Mr. Tony Balogun. We shared a lot of knowledge that I'm about to implement. You might want to talk to him. Have you done something like that? He helps a lot. Because I've seen situations where I met with a client and they were like, oh, I want to get life insurance now because one of my friends' husband died. And then we find out he didn't have anything for the family. I'm like, well, it's too late for them now. Instead of, okay, hey, my friend, do you guys have all these things in place? Have you done any planning for the kids? Because we get so caught up in the fact that, oh, we're just trying to have it make money and take care of ourselves, which is great. We should do that. And that's why 20% of that is for your discretionary spending. But then the other 20% should be for not just spending, but for our own retirement planning and for the future of the kids. Because at the same time, remember the lady, she was like, when I was young, I was just living my best life. I didn't think I was gonna live to 50. And now she's 53. And now she really has nothing for retirement. So we have to change our mentality. I know a lot of us have to change that, but we just gotta do a lot more better job of like, okay, we have to stay together as a community. We have to help each other out. If we want to get on a place where we blacks can actually close that gap on wealth, the wealth gap in America, it has to start with us immigrants. Because I feel like when we immigrants do a lot of good jobs with that, the African American community they follow our lead. I remember when I was in college and I play sports and I was in school, so I take both of those very very seriously. And my American friends, African Americans, were like, "Why are you so serious with books?" And I'm like, "I have a lot to lose. Like, I can't go back to Nigeria without having a degree." And they were like, "Oh yeah, that kind of makes sense." But for them, this is their country. Nothing, they're not going anywhere. So when they see us taking the lead on understanding, we have to start creating generational wealth. We have to put our kids in a place where they can have a head start in life. When I came out of college and I was looking for jobs, I have like four friends. They were not looking for jobs. Their friends had money stacked up for them and they could just start business. They went straight into real estate. So four of them put like $500,000 together and then they just started buying properties because their friends already done that, those kind of things for them. So I feel like if we can, and it's not like it's not doable, it's very, very possible. We just gotta expose ourselves to the right knowledge, which is what this platform is doing, and then not just getting all this information, but actually implementing it and putting it to use. Thank you.
Thank you so much, Erin. And some great truths there, some great nuggets. I'm sure we'll come back. I have questions that I would like to ask you, but so that we don't waste time, we'll move on to the next speaker. I'm writing my questions and I encourage everyone to do the same. But I believe Aaron has set the right foundation for this discussion. So Tunde, take it away. Thank you.
First of all, I'd like to say thank you to PRI management. Thank you for giving me this opportunity to come and share the knowledge that I have with you. I'll start by apologizing first if most of the information here is very basic and seems rudimentary. It's primarily because the audience that I was told I was going to have, I should start from the foundations. I shouldn't assume that any piece of information is already known. So I'm going to use some very basic terms to start with, and then later on it might develop into some slightly more complex terms that you might have questions on. So you could just write them down and then we could tackle them during the Q&A session. The short disclaimer, primary objective of this seminar is to sensitize PRI audience to one of the several vast offerings. The contents of these slides are for informational purposes only, are not intended to be an offer or solicitation with respect to the purchase or sale of any security. Absolutely no securities will be recommended for trading. And information in these slides do not pose or are not personalized investment advice. Information in these slides also are not an offer to buy or sell, nor are they solicitation of any offer to buy or sell any of the securities that I'm going to randomly mention in the slides moving forward. Today, I'll just be sensitizing the audience, as I said earlier, to what the equities market is. I'll be doing a lot of explanations of many of the terms that we come across every day. Some of these terms we know what they mean, some of them we do not, some of them we think we know what they mean, but we'll find out it's really not what we thought. I'll talk about exchanges. I'll talk very briefly about the market indices that we have, the types of brokerage firms, the securities that we have, and then I'll spend a little bit of time on stocks, the types, and then investment stocks have to offer. So, what exactly is the equities market? It's pretty much just the stock market. That's just a word for it. The stock market. And what it is a forum where shares of publicly held companies are issued and traded either through exchanges or through over-the-counter. I'll explain all those terms as we move along. I'll explain in more detail what equities are, what exchanges are, and what over-the-counter markets are. These markets let investors participate in the financial achievements of the companies whose equities they hold. One way to look at the exchange market is like eBay. we'll see that moving forward. It's just like a platform where you can come and buy, where companies can come and sell, and individuals can come and buy the stocks that the companies have to sell. When a company is profitable, the stock market investors make money through dividends, through day trading, through one or several other options that you can use to make a profit. And these profits are called capital gains. I'll explain what that is also as we move forward. So the stock market can be split into two main sections. We have the primary market and the secondary. The primary market is where we hear about IPOs all the time. We heard Apple did an IPO many years ago. Facebook did an IPO about 11, 12 years ago. Robinhood did an IPO a few months ago. What that stands for, what IPOs are, initial public offerings, is when a company which had previously been a private institution, a private company, wants to go public and make its stock available to the public. It's a way of raising funds. It's a way of adding some legitimacy to the company. They have multiples of reasons as to why a company goes public, but the primary market is where a company who wants to go public, sells their stocks for the very first time. Institutional investors, these are hedge funds, brokerage firms, and co. They are the ones who typically purchase the stocks first before it's made public, before it's made available to the general public. And then the secondary market is the market that we are very familiar with. That's when you go to E-Trade, you go to TD Ameritrade, you go to Share, you go to Merrill Edge and the different brokerage firms that we have. That is the secondary market. It's very different from the primary market. The primary market is the initial selling, and then the secondary market is when it's now open to the entire public and you can go and pick any stock you want and make the purchase there or make a trade there. So how do we access the stock market? It's very simple. Just as I said, you access the stock market through exchanges. Exchanges are like eBay, are like Amazon, and the 1,001 e-commerce websites that we have available. That's pretty much what an exchange is. It's a marketplace in which securities, commodities, derivatives, and other financial instruments are traded. Why do we have these exchanges? Primarily to regulate the way trades are carried out. It's to ensure that fair and orderly trading takes place. It's to facilitate the efficient dissemination of price information for any security that you want to buy. And then it also gives companies, governments, and other platforms and other groups a platform, just as I said, to sell the securities that they want to sell to the public. It's highly regulated. It's very organized. And you pretty much cannot just get in there and do anything. There are so many hoops and hurdles that you have to jump through to be able to list your company and begin to sell your stocks. The financial markets we have, there's so many of them. Sorry, not the financial markets, the exchanges we have, so many of them. In the US, we have the very popular ones, the New York Stock Exchange. It's the largest by far. I think some 6 years ago, $19.7 trillion was the market capitalization of the New York Stock Exchange. That was 4 or 5 years ago. As of last month, it's now over $30 trillion. And we have $169 billion traded on the New York Stock Exchange every single day. Just as my brother Aaron said just now, the disparity between the races, the racial divide between the Caucasians that invest in the stock markets and all other races, it's so wide, it's unbelievable. Caucasians and Asians invest heavily in the stock market, and this 30.1 trillion, sorry, the 169 billion that is traded on a daily basis. I don't have the exact statistics in my head right now, but I know the percentage that African Americans or the broad group of blacks, the percentage that blacks take out of the 169 billion is less than 13%, if I'm not mistaken. Now, out of that 13% of blacks, if you want to look at the percentage that Africans make up of that 13%, I'm almost sure it's less than 2%. And that's really not the way it should be. We want to leave the legacy for our children, for the future. The same way Caucasians and Asians and other races are heavily invested in the stock market. It's just one way to transfer wealth. It's not the only way. just as Aaron said, there are several other ways. There's real estate, there's life insurance, there are other ways you can transfer wealth, but the stock market is just one of them. And it's grossly overlooked by Africans, especially in the US. So that's the New York Stock Exchange. The NASDAQ, National Association of Securities Dealers, Automated Quotations. That's what it stands for. It's another exchange that trades primarily in technology stocks. So if you're looking for stocks like Facebook, Apple, Microsoft, Oracle, Intel, that's usually where you'll be able to see these stocks. The other stocks in the US that are not as popular as is the American Stock Exchange. We have the Philadelphia Stock Exchange. We have the Miami Stock Exchange. This Chicago Board of something, CBOE, I can't remember the name now. But there's several other stock exchanges, but the New York Stock Exchange and the NASDAQ are the two most popular that we see and we hear about. In the UK, we have the London Stock Exchange, LSE. Market capitalization there is about $3.8 trillion. In Japan, we have the Tokyo Stock Exchange, the Osaka Stock Exchange, and the Japan Exchange. And then others all over the world. In China, we have the Shanghai Stock Exchange, the Hong Kong Stock Exchange, and the Australian Stock Exchange. Every country pretty much has a stock exchange where they're able to offer stocks for the public to buy. Now, market indices, we see these a lot all the time. We hear about the Dow Jones, we hear about the S&P 500, the Nikkei 225, the FTSE 100. It's pretty much pronounced FTSE 100. What are these? They're just a measurement of a section of the stock market, not the entire stock market, just a section. In the US here, for instance, we have the S&P 500. It measures 500 major stocks that are traded on the stock market here in the United States. It's pretty much just a tool by which investors are able to gauge the temperature, so to speak, of the stock market for a particular period of time. The Dow Jones Industrial Average that measures 30 major companies in the US. We have Apple, we have Microsoft as one of the components of the Dow Jones Industrial Average. We have Microsoft, we have 3M, we have Ford, and most of the other. I think General Motors is also one of them. So they make up the Dow Jones Industrial Average, and it's just 30 companies that are there. The S&P 500, as I said, is 500 companies that it follows. The Nikkei 225 is in Japan. It measures 225 large companies in Japan. And the FTSE 100 measures the top 100 companies in the United Kingdom. So that's pretty much what those acronyms are and what they do. I'm going to skip this a little bit. What are brokerage firms? They are financial institutions that facilitate the buying and selling of the financial securities between a buyer and a seller. What that means is you have the exchanges, as I said, eBay, any other e-commerce websites that you can go to make a purchase. But to make this purchase, you can't just go onto the exchanges. You have to go through a middle, and that's what the brokerage firms are. So the brokerage firms are the interface between you, the individual who wants to make a purchase, and the exchanges that facilitate the sales. So the brokerage firm will give you access to the exchanges. That's pretty much what they are. And we have two types of brokerage firms. We have the discount brokers or the online brokers. We're very familiar with them. They're the ones that pretty much charge a small commission for you open an account with them, what they call an account. You form the account, and then they give you access to make the purchases on the exchange through computerized automated trading systems. Previously, you had to go to a building and fill out a form and indicate what stock you wanted to buy, and everything was paper transaction. But with everything computerized for over 40, 50 years now, online brokers have evolved significantly over the years, and they offer a variety of services right now. But pretty much what the discount brokers do is they provide access to be able to make purchases on the exchanges. Many of them still charge a small commission, but many others have evolved again because of competition and several other factors, and do not really charge anything when you want to buy regular stocks. they make profits from other services that they render. And then we have the traditional brokers. These are full service brokerage firms that offer both the online discount brokerage services as well as other advisory services such as financial planning, retirement planning. They give advice on investments, they give tax advice, regular portfolio updates, and pretty much any other thing that you ask them to do. They offer that service, but for a fee also. And they're pretty much more pricey, more expensive. There is a premium you have to pay for that service that they render as opposed to the discount brokers that just offer you access to the exchange and then you pretty much do all your research and make the purchases on your own. So that's the difference between a discount broker and a traditional broker. Now we hear securities all the time. It's a tradable financial asset, and most of the time they're intangible. I put the word intangible there with a lot of caution. Most of them are intangible, but not all of them are intangible products. Debt securities. That's one type of security. Most will know those are the currencies that we spend. It's a form of security. We have bonds, and then we have debentures also. Those are all types of securities. We have equity securities, which is a very popular one. Those are stocks. And then we have derivatives. Those are options, forwards, futures, and swaps. What a derivative means is just that it's a type of a stock, but with a lot of added bells and whistles to it, if I may use that phrase. They're stocks, but they're some kind of peculiar stocks where you have different things added to them. So it's not just working purchase of a regular stock. You have to, they have a lot of things attached to them. We're not going to talk about derivatives today because that's a little bit more than the time we have, but I'll talk primarily about the stocks today. The stock, as I said, is a type of security that signifies ownership in a company. They're equities because you're purchasing an equity, a piece of the company. You're owning part of the company, no matter how small the stock you buy is. If it's $1 worth of the stock you buy, many of these brokerage firms now give you the option to buy fractions of a stock. So if it's a fraction of a stock that you buy, a full unit of the stock, or you buy 100,000 units of the stock, whatever quantity you buy, once you make that purchase and it's in your name, you have some type of ownership in the company, and you have a stake in the company. The securities, because they're a way of securing ownership in the company, options, earnings, and assets. As I said in the past, everything was paper-based, but right now it's all computerized and you really don't have to walk anywhere. You can sit down in front of a computer and do as much trading as you want. Two types of stocks. We have the common stocks, gives the owner voting rights. Preferred stocks, you have no voting rights. But the major difference between preferred stocks and common stocks is that with the preferred stocks, you have no voting rights, yes. But in the event of a liquidation, for instance, filing of a bankruptcy, Chapter 11, Chapter 7, Chapter 13, if you own preferred stocks, you have first dibs, so to speak, on the stocks that will be paid out before someone who has common stocks has. So it has its benefits and it also has its setbacks or drawdowns. The common stocks are the ones that we pretty much buy all the time through the brokerage firms that we log into. Preferred stocks, most of the time, are issued during IPOs or they're issued to employees or under certain circumstances. But it's not that straightforward to buy preferred stocks over the counter. Usually what we buy are common stocks. Then I'll just explain what ticker symbols are. Again, as I said at the beginning, some of them might look like rudimentary, but I just try to start from the bottom just to make sure that we all understand what we're talking about here. A ticker symbol is just a unique identifier for each stock that is being traded on the stock market. So when you see MSFT, for instance, you know without a doubt that it's Microsoft. If you see HPQ, it's Hewlett Packard. If you see C, there are several companies that start with C. It's easy to think C is Chase. So to prevent this confusions like that, they made sure that ticker symbols are unique identifiers. So C is for, let's see now, Citigroup, I think. Yeah. Chase is JPM, and Caterpillar, which is another big company that could easily be mistaken for C. Their own ticker symbol is CAT. So it just uniquely identifies and prevents any type of confusion or misunderstanding. Or you wanted to buy Caterpillar stocks, for instance, and you typed in C and you made the purchase thinking you were buying Caterpillar. Instead, you were buying Citibank or Citigroup. INTC is a ticker symbol for Intel Corporation, and BRK.A is for Berkshire Hathaway. I just selected these three randomly out of the several that we have. Usually the ticker symbols are either one alphabet, two alphabets, three alphabets, and then for a very long time, the maximum number of alphabets you could have for ticker symbols was 4. But recently, it looks like it's being increased to 5 now. Google is GOOG, even though the name of the company is now the Alphabet Company, but the ticker symbol where you can for Google is GOOG, and it uniquely identifies Google. You can't make a mistake and think you want to buy another company stock and type in Google. You know that immediately that you buy Google stocks. So that's what ticker symbols are. Stock market, as I said, it's a place where you come and buy stocks, and characteristics of the stock market, especially in good markets, is that they have to be liquid. There has to be a lot of market transparency, and then the transaction costs have to be low as possible. Liquid markets is a market where you pretty much know everything. You can see everything. The information is readily available. You don't have to. Nothing is hidden. Nothing is coded. Nothing is behind the scenes happening. Nothing is happening behind the scenes where you're not really sure what you're investing in. You see everything that is going on. You see the price of whatever stock you want to invest in, and you know exactly what you're buying before you make the purchase. And then transaction costs, as much as possible, you want to make purchases where the transaction costs are as low as possible, so that you minimize your own exposure, you minimize your own losses, and you increase your own profitability and your gains. And illiquid markets, as I said, is a market where you really can't see what's going on. Volumes don't move as much as they should. You place an order based on a price that you saw, not realizing that the information you have has changed within the last 10, 15 seconds. And the price that it eventually makes the purchase at is not what you plan to make the purchase at. There are ways to mitigate these, but pretty much the market has to be as liquid as possible for you to be able to for the market to be attractive and for a lot of investors to participate in that market. If the market is not liquid, traders may have difficulty entering and exiting positions, and this affects your bottom line. It affects the true cost of whatever trade you want to. So ideal for trading, the market has to be liquid and it has to be volatile. Know your goals. When you want to invest in the stock market, acquire wealth and transfer this wealth that we are talking about. Pretty much decide on what kind of investor you want to be. A short-term investor, or do you want to be a long-term investor? If you want to be a short-term investor, it's also another name for short-term investors are day traders, but not all day traders are short. If you want to be a short-term investor, you pretty much are going to be a day trader. And you'll be doing several analyses on a daily basis, fundamental analysis or technical analysis. Fundamental analysis are where you have to have a good understanding of earnings reports. You have to know how to read the balance sheets. You have to know how to read the income statements, understand what the price earning ratios are. You have to understand what the EPS, earnings per share, are. You have to know a little bit, nothing too major, nothing too heavy, nothing too technical, but have a basic understanding of what mergers and acquisitions are, what stock splits are, and how to read economic news and financial reports. If you want to go the technical analysis way, it's a little bit easier. You just have to look at historical data and see a particular stock has done over time and make your decisions on purchase or sale. But pretty much those are the two primary ways you can understand stocks that you want to invest in and how to make purchases and sales. And to make this sales, as I said, the online brokerage firms, Alola Invest, and this again is not an endorsement of any of these 4 that I listed here. They're just 4 I picked randomly just to explain. You could use Fidelity, Merrill Edge, TD Ameritrade, E-Trade, more recently Robinhood, any of the others that you want to CNN Money, and NASDAQ.com, especially NASDAQ.com. There's a lot of information. There's a lot of historical information on NASDAQ.com where you can see everything that has been happening on any particular stock that you want to invest in. So if you want to be a short-term trader, you get as much information as you want, as much information as you want from those websites. Even if you want to be a long-term investor, also you have to do a lot of research. You have to do a lot of research. Know what stocks have done well over the last 10 years because you want to invest for the next 10 years. You want to invest for the next 20 years. You want to buy stocks that you're going to hold, reap the dividends over a period of time, and then transfer those stocks, if possible, to your children and your grandchildren. Do a lot of research. The price earnings ratio is another indices that a lot of people pay a lot of attention to. It's not bad to pay attention to that ratio, but also I've realized that it's not the best to emphasize, to pay too much attention and overemphasize that ratio also. It's good to look at it, it's good to see what it's done over the last 6 months, 1 year, 2 years, but it's not good to overemphasize it. Pick a strategy always. Do you want to be a long-term investor? Do you want to be a short-term investor? Do you want to be a day trader? Do you want to sell every week, every month? Whatever strategy you want, try to pick one and stick with it. It's really difficult to stick with one. People trade on emotions. People trade out of fear, panic. People trade on advice, sometimes good advice, sometimes not good advice. It's best to pick your own strategy and work with it, especially one that has been proven and tested over time. Penny stocks, these are stocks of companies that are traded for less than $5. They're very, very enticing. It's easy to make a lot of gains with penny stocks, but it's also very, very easy to lose a lot of money with penny stocks. These are stocks that are usually $5 or less. It's very tempting. It's easy to say, oh, I have $100. I want to buy 20 units of a $5 stock. It's very, very easy for a penny stock to go from $5 to 10 cents. It's very easy. It's if you pick a $50 stock and you have $100 you want to invest, you're able to buy only 2. It's more advisable, especially if the company is a true and tested company, to buy 2 units of a $50 stock as opposed to buying 20 units of a $5 stock. Whether you want to be a short-term investor or a long-term investor, always focus on the future, be open-minded, and always remember that you have to pay you have to pay taxes on your capital gains. It's not something you should really worry about, but just remember that you have to pay taxes on those gains. Trading is a serious business and should not be taken lightly. There are really no shortcuts. You have to study as much as possible to be a successful trader. And then you must also do a lot of reading. You mustn't be bored or tired or frustrated with reading and doing a lot of research. I really can't overemphasize the value, the advantages of doing research and studying. A good plan today is better than a perfect plan tomorrow. As Aaron said earlier on, we have to start ASAP to accumulate this wealth so that we can transfer something to our children. Plan your life. You have a plan, and you make sure you walk that plan. I have to put this there. Proverbs 22:7, the rich will always rule over the poor, and the borrower is always a servant to the lender. Thank you very much.
Wow, thank you so much, Tunde. You have covered in 30 minutes.
I'm so sorry.
What it took me. No. What it took me 6 months. This is like Series 63 material. For those of you who are in the financial industry, this is Series 63 material. I am Series 63 licensed. And what took me six months to study and pass, I passed it once. The first one was the pre-one was the one I did twice. So today has effectively covered in 30 minutes what it would take you 6 months and hours of study. But what I'm saying is that this is real stuff. And I know that it may be over our head for some of us, but we would have some time to ask questions. But there are really things we need to pay attention to. What are options? What are positions? Okay, cut off all the technical stuff for me. If I want to start trading, what do I do? I know those questions are coming. Please stay tight, and we will move to our next and last speaker, Ololade Otayemi. Ololade is going to be talking about, investment opportunities in emerging markets. And by emerging markets, we mean Africa. And then he will be focusing on Nigeria. For many of us, we want to invest in other nations, other countries. How do we get involved? How do we find people that can manage these things for us? Over to you, Ololade.
All right. Thank you very much. All right. Great. I'm in Nigeria right now, and it's evening here. So good day wherever you are. My name is Alola, and I've been introduced earlier. So there is no need to introduce myself again. All right. First, I want to thank you, the PRI team. Thank you very much for the invitation. And I'd like to say thank you to all the speakers, both speakers, Tunde and speaker Aaron. Yes, Aaron. Um, Aaron's motivation is similar to mine. And I think we have a few things in common. All right. So very quickly, I'm going to be talking about how to start and run a successful business in Africa from anywhere in the world. I'll mention a few case studies. And the reason why I am talking about this particularly is because I believe that most of us on these calls are either Africans or African Americans, and somehow we can trace our roots to Africa. And one other thing that I think we need to consider is the fact that Africa still has a lot of potential. And if you're considering building wealth, emerging markets are the places to go. And we'll speak more about that as I continue. So my focus, like I said earlier, is how do you start and run a successful business? I'm personally of the opinion that one of the best ways to build wealth or to multiply wealth and make it long lasting and transgenerational is for you to build businesses that are able to outlive you. I, I like to call them institutions that are able to outlive you as a person. So that's why I will be talking about this. The first thing I would like us to understand is what a business is, because if we don't understand that, some of the things I'm going to be saying might not make impact, or like I like to call it, make sense to you. So first, what is a business? A business is a venture that is set up to solve a problem and consistently generate profit from that solution. Now, two keywords there: solving a problem and two things that I highlighted there: solving a problem and profit. And there's something that I underlined there, which is consistently. The business must be solving a problem, and it must be consistently generating profit from the solution that is providing to that problem. So that being said, we're then going to talk about how do you set up a venture that is solving a problem in Africa or in any emerging markets. But I'll be using Africa and some cases in Nigeria as examples. How do you set up these businesses that are constantly solving problems and are generating profits for you? The first thing is that you must understand what the problem is. And I often ask people this question: what problem are you solving, or what problem are you trying to solve? It's not enough. For those of us who are from Nigeria here, I know a lot of people who are in diaspora, and then they tell me that their younger brother said that they should send them money for them to build some house somewhere so that they can collect rent. Madam Bola, you are laughing. Are you one of them? You're one of them, right? Yeah. I caught you.
No, I'm one of them. I'm not one of them. That's something I never do. My siblings know me. I think two of them are on this line. I don't do that. You have to do your due diligence.
All right, great. So I've seen
But there
many
are
people,
a
and
lot of
this,
people that have been caught.
yeah, and then a lot of people lose money. You work so hard in the US, you work so hard in the UK, and then the little money that you've saved up, you send it home hoping that somebody is investing it and managing it properly, and then they invest it in businesses or things that end up just wasting the money, and you lose all of your hard-earned money and investment. So that's the first question: what problem is this business or this entity you're trying to set up solving? Because if it's not solving a problem, it will naturally struggle. money and wealth gravitate to people who are providing solutions. So that is the first question you must be able to answer. And this question can be answered in many ways. One of the ways you can answer it is, first of all, what are you passionate about? What problem would you like to see solved within those emerging markets? In Nigeria, for example, what problem would you like to solve, or what problem would you like to see solved? If you are someone who has lived in Nigeria for some time before you moved abroad, you might have some level of knowledge as to some of the problems that you encountered yourself and you wish you could help other people solve. And that's a way to somewhere to start from. However, there are other ways for you to figure out these problems. You can ask questions, you can do surveys, you can engage experts to help you find out what problems are prevailing in this market. You can also read up online, right, on some of the trends and some of the things that are going on in these markets, and listen to the news and all of that. And that will give you some insight into some of the problems you can solve. The second thing you need to look at, I'm trying to rush because of time. The second thing you then need to look at is, who are you solving these problems for? Who are the users? Who are the clients? Who are the people who have this problem? Do they want this problem solved? If they want this problem solved, can they afford to pay you for the solution? If they can't, is there an entity? Is there an agency that can pay you for that solution? Who are they? How do you list them? How do you identify them? How do you reach out to them? How do you get to know more about them? How do you get to know what is important to them? That is the second thing you need to consider. Next to that is then to then put together what your solution is. I put in bracket the word unique there, because sometimes the truth is, in emerging markets, your solution might not necessarily have to be unique. It might just have to be something that is not existing in that market. Yeah, a lot of very practical example is a story that one of my mentors told me of some guys who went to India many years ago, and then they entered this community in India and they saw that people were not wearing shoes, and they asked, why are you not wearing shoes? And it turns out shoes typically they are quite expensive and only the rich people wore shoes. And back home they used to wear flip flops. In Nigeria we call them Dunlop slippers, right? So this guy came back, carried Dunlop slippers to this community and was selling them very cheap, and he made a lot of money. After some time, I think they even started making the slippers over there. So what I'm trying to say there is, sometimes the solution doesn't even have to be something unique. It might just be something that you see that's working where you're living. Maybe you're in the US, you see something that's working there, and you think, oh, this thing can work back in Nigeria, this thing can work in Rwanda, this thing can work in Ghana. And then you just carry the same solution there to go solve that problem. A practical example, one of the case studies I'll use is one of our clients in our organization, who both co-founders are based in the United Arab Emirates. They work there. And then they decided to solve a problem in Rwanda. And in the first year of setting up that business, the business generated revenue of $2 million. And they are both based in the UAE. They only visited Rwanda a few times. The team they set up a team in Rwanda, and then the business is doing really well and it's now expanding. So that is an example. They didn't do anything out of the ordinary. They just looked at something that was working in UAE, and then they went and replicated it in Rwanda, and that was it. Right. So that is the practical example. All right. The next thing you then need to look at is the profit. Remember, I said earlier that if you're providing this solution, what makes this a business is that it is generating profit. If it is not generating profit, you are running charity. And a lot of us run charities and we don't know. So I know a lot of people in the US, particularly Nigerians specifically, who have interacted with, who are trying to do stuff back home, and they tell me they have this business back home. And when they explain everything, I'll tell them, excuse me, you are not running a business. You are just doing charity. You are dashing people back home money, and then they are living large on your hard-earned money. Just convert that and say, from today, guys, I want to start doing charity for you guys. And I'll give you this amount every month, and you spend it and do whatever you like with it. That's what you should do. Right. I've seen that happen so many times. So if it is not generating profit for you consistently, then it is not a business. It is charity, or is a in Nigeria we call it a deal or a gig. Like, just keep something once and then you pocket the money and you move on to something else. For it to be a business, it must generate profit from that solution. I mean, it must be able to generate it consistently. So, how profitable is that business? How much are you generating from it? What are your margins? How much do you have to put into the business, and how much do you get in return? What is the difference between both? How much do you spend on taxes? What are your expenses like? How much does it cost you if you have to send that money back to yourself, or the business has to send the money back to you wherever you are based? Maybe you're based in the US or the UK or wherever you're based in the world. If they're sending that money back to you, how much does it cost to send that money back? You need to look at all of that and then really figure out if you're really running a profitable business. All right. The next thing there are the people, and this is a very critical one. Most people, I'll use Nigerians again. If you're Nigerian on this call and I'm throwing some arrows that are hitting you, right? I apologize, please. It's just, I'm just stating the things that I've seen and experienced within my Nigerian community in the US. All right. So the people, who are the people behind this business? Who are the people running the business? Who are the people who are making it happen? What's the team structure like? How do they work? What is their work schedule like? What are the things they spend their time doing on this business? These are some of the things you also need to consider. It's not enough for you to just have someone run the business just because the person is your cousin. Is the person competent enough to run this business? Does the person have domain knowledge? We call it domain knowledge, which is knowledge about this industry where you're trying to solve this problem. Does that person have domain knowledge? Does the person understand the business you are trying? Does the person understand the business you're trying to do? Does the person understand the problem you're trying to solve? Do they have the expertise to deliver the solution? If you have a team put together for this business, does this person or do these people have the capacity to work well together? Do they know how to manage finances? Do they know how to keep the records and the books of the business? Are they well trained? And these are the three things you need to consider here when it comes to the people. The first thing is, are they the right people for the job or for the business in the first place? The second thing is, are they well trained and well, do they have the competence to deliver the vision that you are trying to achieve, or to deliver the solution to your customers? The third is, are they well equipped? Do they have the tools? Do they have the technology to use to deliver this solution and to solve the problems for their customers? These are the things you need to consider. Don't do anything. Don't try to run a business overseas or in emerging market just because it is your brother or it is your cousin. In fact, that is what kills most businesses that most people in diaspora try to do, because these people, first of all, they are not expertise. Secondly, they wouldn't take you serious because you do family, and you're nice. And typically we just set them up, we just set up these businesses just because, and then we don't make them go through the rigor of doing the necessary due diligence, the research, and all of that. Third is that it is not just the best practice. There's conflict of interest in it already. And conflict of interest, if you work within the corporate, in corporate America, you know how serious conflict of interest can be. So by doing that within your own business, by getting your cousin or your brother or your aunties, sisters, younger brothers, cousins, wives, daughter to run your business for you, you've already instituted conflict of interest in the business. You're just starting, and you killed the business right from its infancy. All right. Next is the structure. The structure. I often say that God designed us as human beings as to be beings of structure and systems. When you put food in your mouth, it has a path it has to follow. Then it comes out from the other side when you do your business. When you wake up in the morning, there's a way your body breathes until everything in your body is activated again. When you breathe air into your nose, it has a process it goes through. The same thing with your business, you must put in place structures and systems in that business in order for it to be sustainable and for it to grow. And that's one of the things that makes the business work well without you being there in person. Most businesses that do not survive the 3-4 years mark is because they do not have structures and processes and systems in place. Some of them that do and don't take the structures and systems serious end up dying after a few years. In my work as a venture capitalist, one of the things we look at before we invest in businesses. I used to work as a venture capitalist in Nigeria here with one of the foremost VC firms in Nigeria. And one of the things we look at in every business before we invest in them are the systems and structures that that business has in place, because those are the things that guarantee growth and ensure that the business is able to sustain that growth. And the last thing I'll talk about is, okay, I already talked about the people, is the institution. Building this business into an institution, and that's where you want to be. An institution is literally a business that is able to run, sustain itself, and grow without your active input. Right. You want to build your business up to the point where you are now running the business from a director or a board level, and then the business is still growing and is sustainable. The right people, systems, and processes will build that business into an institution. One of the things we advise all of our clients to do is to decide what kind of institution, what kind of business are you trying to build? Are you just trying to build a business, a lifestyle business, or you want to build an institution? Because building a lifestyle business is just a business that feeds you and your family, pays the rent, pays your bills, your water bills, your gas bills, and all of that. But if you really want to build an institution, you have to be deliberate about it. When Aaron was talking, he talked about having a plan, he talked about having a vision. This is very important if you're trying to build a sustainable business, especially in emerging markets. The truth is, because these markets are emerging, there are a lot of problems, there are a lot of challenges. Nigeria, for example, has a lot of challenges, so many, right? And the advantage of that is that everywhere there are problems and challenges is an opportunity for you to make a lot of money. Most people do not realize that. So the reason why emerging markets are the best places for you to look at starting businesses is that they are the best places for you to make money, because there are so many problems to solve. There's a huge opportunity to earn money, because money will naturally gravitate towards solutions that are being provided. And another thing that I would like to say is that for Nigeria specifically, and a few other African countries, if you look at it, some of the people that are cleaning out in Nigeria right now are expatriates, the Lebanese, the Chinese, the Japanese. Those guys are making millions and billions of dollars from Nigeria on a monthly basis. And these guys are not doing anything outside of the ordinary. And that's the interesting thing with emerging markets. You usually do not have to do anything outside of the ordinary. You just need to look at what's working in the market where you are and come and see where you can plug it in here. However, you need to be aware of local context and a few other things like that. But yeah, those are details that can be worked around. But that's the interesting thing with emerging markets. And before I go, I would like to say that wealth, I've come to realize, and one of the project I'm working on in the US, the New Black Wall Street. The convener of that project is my mentor. He's African American. He's my mentor. He's a very wealthy man. And he often says something. He says that wealth is first a mindset. Wealth is first a mindset. Typical example: if you give somebody who does not have the right mindset $1 million today, come back in 5 months, the person will have reduced that $1 million to his level. If you give somebody who has the right mindset $1,000 or $2,000 today, come back in 5 months, the person will have increased that money to his or our own level. So the biggest thing you can do for yourself is to really understand and your mindset and be sure that your mindset is that of a wealthy person. Next thing that follows that is to then begin to take the right action to make those things a reality. I think, yeah, I'm done with my presentation. If you have any questions, you can reach out to me. My email is already at over.company. If you want to set up a business in Nigeria or in any emerging markets in Africa, that's what we help our clients do. You can reach out to us and we can guide you through the entire process. Thank you very, very much.
Thank you so much, Alola. Before you go, I'm going to hit you with a number of questions, and then you can start from there. I know you're involved with a lot of venture capitalist efforts. Can you tell us your role in one of two or three of those places? I know about Piggy Bank. I know about not Piggy Bank, Piggy Vest. I know about Paystack. And then number two, if we want to get into things like that, what do we need to do? How do we start? Number three, what are the trending markets right now in Nigeria or in Africa that you would recommend? What is it that is trending that people can consider? Some of us want to come together, like 3, 4, 5 of us, and put money together and do something. But we want to have an idea of where. I know that that's a consultation that you do by the side, so you're not going to provide details here, but at least give us something to think of, to start a process for now. Thank
Okay,
you.
you asked me 3 questions. I was only able to catch 2. The first one is my role in
Paystack and Piggyvest.
Okay. All
Number
right.
two,
What was
I said, what are the viable trends or markets that are emerging
Okay.
that we should plug into? And then when we want to get into venture capitalism like you, like, okay, we want to come together and be a startup business that we can turn around and sell for $1 billion. Where do we start from? What should we be looking at?
Okay. So I'll start with the first one you asked, my role. So I used to work with Ventures Platform. I still work with Ventures Platform, but no longer as a staff, but more like an advisor and a consultant now. Ventures Platform is one of the leading investors in the tech ecosystem in Nigeria. The website, you can look it up, venturesplatform.com. Ventures Platform has invested in over 50 startups, including Paystack, Piggyvest, Tribe, Greek, and many others. A lot of startups like that. In my role while I was with Ventures Platform, I was the chief of staff at Ventures Platform and also the president of the holding company that owned Ventures Platform. And in my role essentially was to help make the right financial and investment decisions in these startups, and also create systems to support these startups to grow and scale. We call it scale up until the point where they're either acquired or they go public. For now, we don't have any startup that has gone public, but we've had a few acquisitions. One of the most successful acquisition was the acquisition of Paystack by Stripe for over $200 million. And there are some other acquisitions in the pipeline. So that was my role. Is really first is to make the right financial investment decision to invest in the right founders and the right startup. And second is to support those portfolio companies to grow and scale up until they're either acquired or go public. So that's my role there. The second question as to how you can position yourself as a startup to be able to get investment from venture capitalists is very simple. So if you do all of these things that I've stated, find a problem that is large enough, provide a viable and scalable solution to it, and ensure that your solution is profitable. You solve 90% of the problem. The other things around the team and all of that, and then getting your MVP, and those are all the details that need to be worked out. But the basics still remains the same. Problem, solution, profit, and scale. Those are the things that you need to consider. Right. Then trends in emerging markets. There's so much right now. But I think the ones that are gaining ground very quickly are businesses that are now leveraging technology to solve problems. It can be any kind of problem. We've seen like Piggyvest, for example, literally is leveraging technology to help people save. When I was growing up, we used to save in what we call colo. They are now in the US, they are really designed piggy banks
Piggy banks,
that very cute pig and all of that. That wasn't what we had when I was growing up. The ones we
Just,
had when I was growing up was made with mud.
I'm just
Right?
messing with you.
What? Yeah, it was
There's
made with
another
mud.
piggy bank.
Uh, well, she has a bank account now.
Good.
We just save money there. Yeah. But that was what we had when we were growing up. And when it was Christmas, we break it and then we go and buy sweets. I mean, what does do what to do, right? But they've now helped to create that consciousness and culture of saving within millennials, which is really incredible. And they just did it by bringing the same colo concept of the piggy bank and digitizing it. So it's really for you to look at what problems you can leverage technology to solve and then solve it. The reason why that is important is because technology makes it easy for you to scale any kind of business you're doing. Um, and that's what investors look out for. Any business that can scale with minimal resources and minimal effort. And that's what technology helps to do. We've had people who leverage technology. For example, one of the startups literally leverage technology to connect artisans with people who need their services, and that's it. So there are a lot out there. Our clients in Rwanda, what our clients in Rwanda literally is doing is they're using technology. They build an online platform. They're using technology to connect small scale farmers in Rwanda to international off takers. All they do is connect these farmers in Rwanda to international off takers to take their farm produce and go and process in Europe, in Asia, and all of that. And in their first year, like I said, they turned over $2 million for a business that just started in an emerging market in Africa. So that's what is possible if you do it right and you solve the right problem. You definitely have success. I hope
Thank
I've
you.
answered the question.
Yes. So I think the last one is, does Opera help? In what ways do you help?
All right. Yeah. So this has been, interestingly, this has been the core of our work and the efforts that we've been asked to jump on. Um, In fact, two of the clients that we have now are not even Nigerian companies. One of the companies is an European company that we are now helping to set up shop in Abuja, Nigeria here. And I'll be very honest with you that every time these guys reach out to us, I wish it was Nigerians that are reaching out, because what these guys literally do is they come here, they use our resources, and then they carry all the wealth into their own economy. And you know, I wish it was Nigerians reaching out to us to help them with this. But yes, that's what we do. We help people set up businesses, create structure within the businesses, and we help to monitor those businesses. So the way our system and our approach is very straightforward. We believe that sometimes you just need a second eye to be looking and be checkmating that business. Are they doing things right? Are they doing the right things? And then we then ensure that you have the right reporting system and reporting template in place, so that even if you are not checking in with these businesses or the people who are running it on a daily basis, you have a dashboard where they are reporting the critical issues and the critical things about that business that you can go and view from time to time. A good way to explain that is, if you are driving your car, imagine that every time you needed to check how much fuel you had to come down, park the car, go into the fuel tank, look into it, and be sure, okay, I have 50% now. Or every time you need to check um, uh, how much you're speeding, you have to open your window, bring out a manual speedometer, and check your speed. The dashboard is there so that at a glance you can see all those critical information. The same thing, the same system is what we do or we set up for our clients. After helping them set up the business, hiring the people, putting the structures in place, we then create a dashboard that enables you to monitor your business. And we just serve as your eyes and ears here. So if you need to fire someone, let's say you hired your brother on the business and you need to fire, you don't have to do the firing, you do the firing because the person is not doing a good job. I mean, the person hurting the business. So it's a relationship between us, not between you and the person. So yeah, that that's literally what we help our clients achieve.
Thank you so much Okay, those are my questions. I
Thank
see
you for having me.
questions coming up on the chat. So Valerie, go ahead. Thank you so much, Lolade.
Great, great, great presentation. Thank you so much to all our wonderful speakers. It's almost as if you met and said, Tag, you are it. You do your portion. Now you take it up from here and you do it up from here. And you've all been amazing building up on what each person said. One of the questions we had was about life insurance. I recall that the speakers talked about a way of transferring wealth and would like to know how you can use it as a wealth creation tool. And whichever one of the speakers would like to address it, please go ahead.
Yeah, I'll address that. So that's a great question, and this is such a beneficial this meeting we're having this morning because what everybody has talked about with three speakers, this is pretty much what the rich folks are doing. All these three things, they put themselves in a place where they establish a plan, invest their money, and they have multiple streams of income. So this is what when you see white people making money, the three things and everything we've talked about is pretty much what they're doing. So when it comes to life insurance, the first thing I like people to understand is the first job that life insurance does is to have protection for the family. So when you have a life insurance policy, there's something we call the death benefit. So that's the money the insurance company pays to your family if you pass away. So let's say you have $1 million insurance coverage, and then you pass away, then the company pays that $1 million to your family. So that's what so there's two types of life insurance. Term life insurance is there's permanent life insurance. The easiest way to kind of understand is renting an apartment and buying a house. So when you rent an apartment, it's your apartment, you can go in there and sleep anytime you want, but you don't really own it because you're paying rent to the landlord. So when your lease expires, the landlord might actually kick you out. So when you have a term life insurance, you start very, very cheap because it's very, very affordable. And the only thing it does is when you pass away, that money is passed to your beneficiary. It could be your spouse, it could be your kids. But the permanent life insurance does two things. So it offers death benefit and living benefits. So that's like when you buy a house, it's your house when you buy it, and then that house start accumulating value for you. So that house you can buy for $20,000, and then it grows and increases in value, and you can actually sell it for more. So permanent life insurance, when you have that, the company pays you dividends on that. So dividends is when the company makes profit, and then they share that profit to their policy holders. So what that does for you is the permanent provides the death benefit for your family, and it also provides the living benefits. So living benefits is those dividends and the cash that you build in that policy. So you can actually use some of that money in that life insurance while you're alive.
That is if you have a cash value. That is if you have a policy that has a cash value built into it, right?
Right. So the permanent life
Not
insurance,
all policies have cash value built into them.
if it's a permanent life insurance, it will have cash value.
Okay.
So that's the difference between the permanent and the term.
Okay.
So term only does one thing, just death benefit. You pass away, your family gets the money. You can't use anything from that money. But the permanent one is the one that builds cash value for you because the company pays you dividends on that policy. So it builds cash in that policy that you can use some of that money while you're alive. And also whatever is left, your family gets that when you pass away. So when it comes to picking which one is the best, it actually depends on the current. It's not a fit for everybody because the permanent builds cash for you, it's much more expensive as compared to the term. So the term is very, very cheap because only your family gets that money. But permanent because you can actually use that money as well. And a lot of times, what the rich, go ahead.
I said, while you're still alive.
Right. So a lot of times, what people do is actually the wealthy folks, when they have that permanent life insurance and they have cash in, just like what Mr. Tunde was saying, if there's a downturn in the market and the people are losing a lot of money, the rich people are investing more at that period of time. But a lot of times, what happens is we black folks, we don't even have money to invest.
The money out.
Right. So everybody be like, oh, I'm losing all my money. Let me take my money out. But the rich people are investing my money. So if you have a life insurance policy that has cash in it, you don't have to worry about the market going down. You can take some of that cash and invest more into the market.
Okay. Okay, thank you, Aaron. I know there's a lot more to that, but we're running out of time and we still have many questions. So again, we can never exhaust everything on this platform. We would encourage our people to reach out. So next question, please.
Yeah, the next question was about, I think that's to Tunde, about what is trending now. I know at the beginning we all had the disclaimer. I think we've had it twice. Do your research, do your research, do your research. But I think it'll be a nice Saturday afternoon gift to hear what's hot.
Maybe in terms of industry, not a particular company, maybe in terms of what industries are hot now, because I know that you don't want to put yourself on the spot.
Yeah, I'm not going to even do that.
No, just
What
industry
I
trends.
can do is, okay, I can answer the question.
We don't want to put our speakers in trouble
I
because
know
nobody
I'm trying to answer the question by showing what you can do to find stocks that are hot, as you put it.
Thank you.
Yeah, but I'm not able to share my screen to get onto yahoo.com, onto the
So
internet.
maybe we should come back to you later.
What you can do is you can write this down. Go to nasdaq.com.
Okay.
Nasdaq.com, somewhere on top on the toolbar, you'll see market activity. If you click on market activity, click on stocks under market activity, and then scroll down to wherever you see stock activities. There are 4 boxes there. One of them shows stock trades by volume, and one will show stock trade by volume in terms of shares volume, and one will show stock volumes by dollar volumes. Look at those two. It'll tell you what stocks are trading heavily in terms of shares being sold. It'll also tell you what stocks people are buying the most based on the dollar value. If you look at this over a 3-4 day period, every day for 3-4 days, you'll be able to pick stocks that are doing very, very well and have done well over the last 1 year.
Excellent. Thank you.
I don't know if that answers it. I'm not going to give any stock, even in a market segment. I don't want to do that. But if you do what I just said, go to nasdaq.com, click market activities, click on stocks, and then go to activities at the bottom. You'll see volumes by dollar and volumes by trades. And look at the 5 top stocks there over the next 4 or 5 days. It'll give you a good indication as to which stocks are doing very well.
Thank you so much, Tunde. And you've done what our professors used to do. It's like, this is your question. Great. In the library, on the left-hand side, on the
Yeah.
top shelf, you will find.
Yeah.
Thank you so much. Thanks for the homework too.
Yeah,
And
research
we
you
have
do yourself is always the best.
Research.
Yeah, yeah. That way I can't come after you if it doesn't go my way. Thank you so much for sharing that. We have another question about our 401k contributions. I think the person wanted to know the importance of maximizing our company's matching percentage. In other words, if um, you can contribute up to 8%, and all you contribute, or the company will match 8% when you contribute, and all you contribute is 3%, or anything different from that 8%. What happens? What are you losing? What are you getting? I mean, can any one of you explain that, please? Or talk about that, please. Thank you.
Yeah, that's a great question. And I'm glad you brought that up because that's one of the things that concerns me a lot when you meet with people and they're like, oh, I want to invest. And I'm like, have you checked your employer's benefits yet? Because that's the easiest place to start from. So if your employer is matching up to, let's say, 5% of your income, right? And you only they won't explain all those things to you. They just give you that package once you get employed. And a lot of us, we just get happy, oh, I have a job, and you don't sit down to really read and understand those things. But if your employer is matching up to 8% for you, right? You have to do up to their match to get all that full match from them. So if they say they will match up to 8% of your income and you only put 1%, they will only match up to 1%. But if they match up to 8 and you put 8%, you already got a return on your money. So if 8% of your money of your income is $100 and you put $100 into the investment account, they're gonna put $100 for you. So from the jump, you already have $200 to invest into that account. I met with a lady and she's been working at this job for like I think 2 years. And the employer was matching up to 10%. And then when I checked that contribution, she was only doing 2% for 2 years. She left the minute and she was so mad. I'm like, don't get mad at me. You should have researched this and understood what it was like. So that's like one of the best places you can start your investments. Anything you plan to do, okay, check what they're matching. Check what kind of plan is it. Is it pre-tax? Is it post-tax? and then which one fits into your tax bracket that you currently in. If you're in a position, let's say you're a doctor and you're in residency right now, then you can go for the post tax because you know your income is going to increase and you're going to be paying a lot of more taxes. So if you have an investment account where you can pay the taxes now while you're in a low tax bracket, you have to take advantage of that. And then whatever your employer is matching, you have to try at least match up to that. If it's 3% that they're matching, match up to 3. If it's 5, match up to 5. Don't leave any money on the table.
Thank you so much.
Thank you so much, Aaron. And the questions about life insurance keep coming in. We have another one about, um, the difference or the benefits of having external life insurance, even if your employer has their own life insurance. So, what is the benefits of having like an extra life insurance outside your company?
Awesome. That's a great question. So oftentimes the life insurance that you get from the employer is oftentimes a term policy. So it's a term policy that only provides the death benefit for just your family, which is great. But a little bit downside to that is the fact that it's an employee benefit. So what that means is if you leave that job tomorrow, that benefit might stop with that employer. So you have to check with them and be like, hey, I know there's a benefit that I get here. If I leave, is this going with me? So if they say, yeah, it's yours and it's going with you, that's fine. So that might be enough. But a lot of times, what they offer is probably like one times annual salary up to like 50,000. But then in the grand scheme of it, 50,000 is not going to be enough to cover your family if anything happens. So if they offer that, I'll say take it. So because a lot of times it's very, very cheap because it's a group life insurance. So it's very, very cheap. Take that, but at the same time, you still have to get your own. So regardless of who you're working for, you have your own policy, you have your own coverage. And then sometimes when they offer that, people get confused. I had a man that he was working for this company for like 10 years, and he got term life insurance with them. So for his mindset was, oh, I have life insurance at work, I don't need it. But then after 10 years, he got fired from that job. Now, 10 years later, so he got the job when he was 33. Now he's 43 and he got fired, the benefit stops. Now he has to get his own life insurance. Now he's 43, he's much more older.
More
It's
expensive.
not as healthy as it was back when he was 33. Now it's so much more expensive. So those are the things a lot of people need to kind of understand. Okay, I know they offer this, but is this just while I work here, or if I leave it goes with me?
Life insurance. I'm a state licensed insurance agent. So one, your life insurance policy with your company for most companies is not portable. When it's portable, you can only it becomes more expensive because you're not going to get that group rate that you had with your company. For instance, maybe your company offers you 50,000 for free. Then they can also offer you an option and say you can double this or triple this for $10 a month additional. So the initial 50,000 they're offering you is free. That's the company's gift to you. Then they can ask, okay, you can buy 100,000 more for $10 a month or $50 a month. But the thing is, when you leave the company, like Erin said, it most times, 90% of the time or more than 90%, it's not portable at that rate. When it's portable, it now converts to individually owned. You don't get the group rates that your company has. So you have to factor, okay, if I'm leaving after 10 years and it's not portable, what will be the rate? If you ask your HR or benefits department, they would tell you, if you leave today and you want to convert it, you want to take it with you, this is how much it will cost. So rather than figure out all those uncertainty, it is advisable to have a personal one outside of work so that every time you leave a job, for instance, for people who are still very young and you have a lot of money in your company, whatever, but then when you leave after 3 years or after 5 years, you start again. Like the person Erin is mentioning, at 43, you are older, one, your premiums will be higher. Number two, by 43, you may already have pre-existing conditions. Maybe when you first started, you didn't have anything. Maybe by now, you have high blood pressure or you have fibroid or whatever. So you are now an at-risk person. You're a higher risk. Insurance premiums go higher once you have a risk and once you grow older. So one, I advise people buy early. As soon as you get out of college and you have a job, no matter how much you're earning, buy something personal for yourself. The premiums are cheaper the younger you are. And also, the cheaper the premiums, the healthier you are. If you don't have any underlying conditions, you don't have high blood pressure, you're not obese, all those things, you get a good rate. Why wait till you're 40 to start? When at 25, you can get $1 million policy for less than $100 a month. But the higher you go, the older you become, and the less healthy you become, your premiums go up, and you may even be declined. You may be denied. So we have to take care of those things. Don't settle for only your company policy. Get your personal policy outside. Irrespective of the company you work for, your personal policy is your personal policy. It stays with you until you decide you want to cancel it. And you start early so that you can get better rates. Thank you.
Yeah, thanks for adding that. You really explained it well. And then one other thing when it comes to employer benefit, a lot of times I ask people, if you go to work tomorrow and you get an accident and you can go to work for 3 months, what is your employer, what provision do they have for you? And 90% of the time, a lot of people are like, oh, I don't know. I never thought about it. So I tell people, when you get to work tomorrow, call your HR department and ask them, what's the percentage of your income that is covered under long-term disability? That's one of the biggest concerns, right? Because the number one causes for bankruptcy is medical care, medical cost. So if you get in a situation where you have some kind of sickness or accident, now you can't go to work, and you don't have your full income coming in, and now you have medical bills. But that's one of the things why a lot of people can never achieve financial stability or create any generational wealth, because all these things that comes along the way, if you don't have a plan to address them before they start showing up, it's just going to derail you from the track of getting to that future that you plan for yourself and your family.
Any more?
Those are all the questions I have for now. But thank you so much, Alexia, for your question. Alexia is interested in, learning more about me too, learning more about ETFs and REITs. And I think we've been asked to research, but who knows? We might do that as a follow-up. We don't know yet, but we will still do our research. What I'm going to do is I wrote down what Tunde asked us to where he asked us to go. So I'm going to put that here, and please check and make sure I didn't miss anything. But those are all the questions I have. Thank you to all our speakers, though. You've been amazing. I've learned a lot.
Okay, good morning, my name is Sinu from California. I thank you for this section. It's really, I've learned so much, and I've learned a lot. So I was saying that this program is very, very educative. I've learned so much. Though, like you said earlier, there's so much to learn. So my question is, how possible is it for this kind of program to be straight or earned every month? It's just a request. I don't know. Maybe it's possible. Honestly, like the speakers rightly said, we Blacks, we have this kind of mentality that when you are asked to invest, like you think we're wasting money, and we're so rigid about changing our mind and our mentality. But it would be so nice if we can have more of this. Like Alola, he mentioned so many opportunities that we can, that we can have in Nigeria, which some people, most of us, don't really know. And I'm saying that it's really, good. And I believe that with this, so many of us Africans can come out of this our little hole and come out to the limelight. We say the whites making money, we say the Asians, but what are we Blacks doing? And I just want to ask if it's possible, maybe bi-monthly, or I don't know, as God helps you, to make this kind of, we go forward, maybe. I don't know, just a request. Thank you,
Thank you. And thank you for the contribution and the comment. We do have the meeting monthly. It's just that we don't have the same, we have different topics, and for those of you who are constant attendees, we did this part 1 in July, then we took a break. We took a break in July, and then we're back here. So our topics vary, but sometimes when there's a need, we organize maybe like extension, or we actually, when people indicate, we may keep an eye and just say, okay, maybe we want to have a follow-up with some people that are interested. So if that is something you'll be interested in, a follow-up with people, I would say anyone that is interested in a follow-up conversation, privately message us with your email and your phone number, and we will see if we can set up a follow-up conversation with the 3 of them or with one of them at a time. And we know that this is a conversation that needs to happen more frequently, but sometimes we don't have all the time, and we have different things that we want to talk about, so we are not going to be able to do financial markets every month. So, but that's depending on the response, we would love to connect with people over time. If Ololade can spare the time, I know he's very busy. I know Erin and Tunde are very busy as well. So we would find time to say, okay, this is a follow-up from our discussion, and then we know that, okay, we are dealing with people who want to really pursue something, people who have ideas, they want to run these ideas off the professionals, and then maybe they're even willing to make a commitment to secure services, because at the end of the day, these are paid services, over time. For instance, everyone works for a bank. If you have to go into the bank, set up, I remember last week or 2 weeks ago, Erin, I directed someone to you. You may have to set up a conversation, a discussion with him, and then go into the bank and set up something. You may have to do the same thing with Lolade, So, but again, it depends on the interest that we get from here. But again, we won't be able to do financial accountability every month, but we would always have important conversations around our community, around the family, our careers, and how we can prosper and thrive in this land or wherever we are. Thank you. Okay. So I'm going to let Erin give us his parting thoughts, and then Lolade would come after that. So give us your parting thoughts. If people didn't hear anything at all, 2 or 3 things that you want them to take home, don't elaborate. We don't have the time. Just pam, pam, pam.
Okay, sure. First of all, again, thank you so much for bringing this platform. And the things that I'd just like to say to another way is, for everybody listening to this call, the rich folks are not doing more than this. All these 3 things that we talked to you guys about, this is all they are doing. And they manage their taxes properly, which is a different conversation. This is all they're doing. They have multiple investments in the stock market. They have businesses that they invest in, and they have a plan. They have a plan to, okay, this is what I'm trying to achieve for myself and my family. And they've talked to professionals that do this for a living to guide them to where they need to get to. So all we've talked about, that's pretty much where it is. Then my advice would be, I feel like webinars and seminars like this is like going to church. Don't be that person that leaves the church and on your way home, you're like, oh yeah, the pastor said a lot of great things, like the message was great. And then 6 months later, you see them like, okay, which one of all those things did you implement? Like, I'm still thinking about it. Like, not having knowledge is better than having knowledge and not putting it to use. You'll have been better for you not to hear all these things rather than hear this and never use any of this. And then the last thing is make sure you try and share and look out for every other person. We need to put ourselves together as a community and help each other grow. Thank you.
Thank you so much. Ololade.
The funny thing is, Aaron just took the words out of my mouth. I had 3 points written down, and Aaron really said them, but I'll still go through them. The first thing I wanted to say is,
Glad I went.
we all, right? we don't want to be wealthy, but the problem is that we don't take the commensurate action, right, to make that a reality. And Aaron just hit the nail on the head. If you want to be wealthy, take action that would make you wealthy. Wealth comes to problem solvers, so solve problems for people. And finally, let's not forget, wealth is a mindset. Wealth is a mindset. I think those are the 3 things that I would like us to go away with.
Thank you so much. Thank you. I really appreciate both of you, and I appreciate Sunday as well, who had to drop. And to all our participants, I hope you have gained one thing or the other. I know that many of us here are professionals. We already know this thing, but sometimes it's good to hear them again. It's good to hear the new trends. It's good to just make sure that we are staying on track. Sometimes when you hear it again, you'll be like, okay, I used to do this before and I stopped. Now I have to pick up the pace again. So even if that is what has happened today, that you're going to pick up the pace, or you're going to review your insurance policy. Every time somebody passes away, we shouldn't have to do GoFundMe all the time. We shouldn't have to help a couple or a family move out of their home because the breadwinner died. Now they can no longer pay for the mortgage. They can no longer afford the mortgage. They have to move out. We have to find a lower rent or something for them. If we have a good life insurance policy in place, it will take care of that. We're not praying to die early, but nobody's guaranteed tomorrow. We don't know. So it's good to have things in place. And while you are doing that, also, let's create investments. Let's live well. Your investment will help you to live well now, in addition to also leaving something there. So don't just put money for when you die. Live well now and live, have multiple streams of income. Talk to people, partner with other people. We see the Asians doing this. We see all other ethnic groups doing it. Why are we not doing it? We say, oh, we don't trust people. Well, we can develop a template. We can have lawyers, sign agreements, and things like that. But don't let us allow things like that to hinder us from really, really, making wealth, creating wealth, leaving a legacy for our children and even within our community. There's nothing wrong with 2, 3, 4 people on this forum setting up a scholarship foundation to help, less privileged people. Let's do it. And we can start from somewhere. You can put as little as $25 in a savings account for your children over time. And don't put them in a regular bank savings account like Aaron's bank where they will give you 0.003. Find a good, and I know that your bank, I'm just kidding, your bank has other growth accounts as well, Regular savings account, don't cut it. If you have regular savings account and you have $1,000 there, after a year, it has gained $1 or $2. That doesn't make sense. Find a high yield savings account that will generate maybe 3%, 4%, 5%. And you can start as little as $25 a month, So you don't have to have the big money, but the thing is start small and consistently grow. All these little pieces of information that we've heard today, please let's act on them. And I pray that when we hear of one another 6 months, 9 months from now, we will all be doing much better. Again, if you would like to get this information, the presentations, or connect directly with the speakers, please private message us your email address or your phone number, and we will touch base. And then if we get enough interest, we'll set up a follow-up call. Maybe not on a Saturday like this, maybe just another time that works for them. We will set up a follow-up. Again, I want to appreciate Aaron, I want to appreciate Sunday, and I want to appreciate Alola Day. Thank you all so much, and thank you to all our participants. We appreciate you spending your Saturday afternoon or your Saturday evening with us. God bless you and enjoy the rest of your weekend. See you next month. Our topic for next month, let me quickly share that before you go. It's going to be something on the college roadmap. I know when we see something, it sticks. So next month, we are going to have the college roadmap. We're going to be talking about SAT, ACT, how to fund, how to get money to fund your child's college education. People are talking about test optional, SAT is optional, ACT is optional. Which colleges are optional? When they say optional, what do they mean? How do we find money? Are public schools still the cheapest option? Some of us think the public schools are the cheapest option, but sometimes you get more money from the private schools, even though they're expensive. So save the date. It's September 18, 2021. Next month, we hope to see you. It's the same time and on the same channel. Again, thank you so much. We're glad that you joined us today. I want to appreciate all my PRI teammates. Thank you. Valerie, thank you. Thank you, Jenny. Thank you. Bofash. Who else am I calling? I think all of my PRI teammates. Thank you. God bless you. Have a blessed weekend. Bye.